Thank you very much. And it is a great pleasure to be here with you guys and share all the insights that this distinguished panel is gonna share with us on the digital assets life cycle, the issuance, trading, settlement, and custody. So the first thing I want to do is I want to guys welcome you, and if you can give us a short intro of what you do, who you are, and what do you work for, which company you work for. So Matthias, we start with you.
Thanks, Mariano. So Matthias Hirtschulz, I'm managing partner with Define, working in the blockchain space since 7 years, supported in that role over 70 different projects, from crypto projects, custody of crypto assets like Bitcoin, to building debt capital markets platforms for banks. So our clients are really large banks, market infrastructure providers, asset managers. And before that, I worked on classical banking projects in the capital market space.
Very good. Thank you very much, Matthias. Victor?
Hi, everyone. So my name is Victor Busson. I'm the CMO of Taurus. So Taurus, for the one who doesn't know us, we are a global fintech specialized in digital asset infrastructure. We have two main activities. So on the infrastructure, we offer the custody and the tokenization building block for banks. And we have a second activity, so we are also a technology provider which is regulated. So we operate an organized trading facility, which is TDX, which is a marketplace to trade also tokenized securities. So infrastructure and financial services.
That's great. Thank you very much, Victor. Mainak, please.
Hi, everyone. My name's Mainak Ghosh. I'm the head of blockchain strategy at Ironlight. For those of you who don't know, Ironlight is a regulated platform for trading tokenized securities in a regulated and compliant way. We're based in New York, Austin, and very recently we opened an office in Abu Dhabi.
Wonderful.
Excellent.
Thilo is my
Thilo,
name.
please.
I won't repeat everything that's already mentioned on the slide here. I work for the German Stock Exchange, which Clearstream is part of. I'm responsible for the business development there, for the commercialization of our security services, if you like. So we do issuance, trading, settlement, custody, primarily of real-world securities. We digitize these, we tokenize these securities, and this is why I'm sitting here on the panel with the colleagues to talk about exactly these things, not about traditional securities, but how traditional securities are really transitioning into that digital age, be they through digitization or tokenization.
That's great. Thank you very much, Thilo. So, guys, before we move on to the life cycle, and we will cover each of the components, right? The issuance, trading, settlement, and custody. I want to hear from you, and you guys can share a little bit your vision on blockchain and capital markets. How do you see this happening? What is your vision? What is your thoughts, right? So maybe we start with you, Matthias.
Yes, so we can look at the market infrastructure we have today. So I would characterize it really as a vertical infrastructure with a chain of intermediaries, chain of custody, it's sometimes called. Now, if we move to a blockchain-based system, it shifts. It's really, I would say, paradigm shift to a more horizontal, open infrastructure. On that kind of infrastructure, really a huge diverse number of different asset classes can live from cryptocurrencies to traditional financial instruments to maybe NFTs, tokenized infrastructure, maybe machines for corporate use cases. So that's the first difference. We have an infrastructure that allows for this. That's not possible in the traditional infrastructure. And the second point really is, at least technically, these assets are available immediately worldwide, and different kinds of services can integrate and interact with these assets. So, for example, think about a stock that's represented on this kind of open infrastructure. Suddenly, this allows, for example, to be used in a DeFi protocol as collateral, or it could be used for an ESG data provider and provide auditable information. It could be used for an asset manager to put into a fund. And really, these integrations are only possible in this open infrastructure. Now look, maybe to give an example from a user's perspective, in the retail space, you have your banking app, you have your cash account, you have your classical securities. And then on the other side, there's the wallet world, let's say MetaMask or so. That's the key to the Web3. Now, I think these two worlds will move closer together. Let's say you could call it a banking wallet, where I really have the access to the Web3, where I have a holistic view over all my different assets. And let's say with a swipe of a finger, I can pledge my securities and use it for refinancing and get euro liquidity back. And then I think there is a really new user experience, or streamlined experience that's really only possible in these kinds of infrastructures.
That's great, Matthias. Thank you very much. Interesting perspectives there. Victor, from your perspective, blockchain and capital markets, how do you see your vision?
I will start with a simple vision. The vision is the following. It should be as easy to buy and sell a private security as you are buying a book on Amazon. So what's happening today is that when you look at the private capital markets, as opposed to the public listed capital markets, where the company will be listed, the infrastructure is already electronic. When you look at the private capital markets, there are still a lot of inefficiencies, and it's quite even archaic. A lot of paper, some even custodian might still be using fax. So there is a lot of effort on digitization. Those blockchain-based act as a catalyst and as a reason to drive change, to transform it, and to basically becoming digital in an incremental way, because it won't happen, and we see it all. It takes time to adapt, to drive change. But the goal is really to make, in the end, the private capital market as efficient as the public capital markets by digitizing, meaning by tokenizing.
Very, very interesting perspectives, Victor. Thank you for sharing. And I like very much the point on efficiencies, the opportunities, and the, the example of Amazon, right? So, think about Amazon for capital markets, right? So that's a great example. Mainak, from your perspective, your vision.
Yeah, I think you guys both made great points. In short, my vision is to tokenize everything. I think that in the long term, blockchain will be the default way to represent all securities of any kinds. And that's going to lead to an increase in efficiency, transparency, speed, and liquidity. And it's going to democratize access to traditionally exclusive asset classes like real estate or private equity. Yeah.
That's great. Thank you very much. And Thilo, you're coming clearly from a different perspective, right? So I'm very keen to hear from you as well. What do you think?
Yeah, from my perspective, being one of the older people probably here at the entire conference, when we look back 25 years ago and we had electronification of the stock exchanges, I remember discussions with floor traders saying, and what does that actually do to me? I'll still exchange a stock, a bond with anyone here in the room, and that's going to be it. It's going to be slightly different the way I do it, possibly less paper-based, but I'm not going to do more business. What's in it for me, right? Me, as a youngster at the time, I could trade a security on the German stock exchange once a day during a midday auction in a super opaque sort of process. I had no idea what's going to come out at the end. I got some shares at some price that someone probably front ran me on, and that's it. Nowadays, if we look at our normal stock trading activities, and anyone here will be having stocks, I hope, in some way, shape, or form, you know how it works. It's instant, it's fast, you have high-frequency trading, you know exactly what the price is. You can buy one share, you can buy a fraction of a share, whatever it is. I think this is what we're going to be seeing with this sort of technology. It's not here today. I think the panel before us articulated that quite well. We're not here yet, but I see, and I'm not going to use Amazon, I'm going to use Spotify. I think we're going to see a Spotification of our industry where instantaneous creation, distribution, modification, information on assets, any sort of assets, stock or other, will be available and possible for anyone us here in the room. And I think that's not my vision. I think that's a real scenario for our industry.
That's great, Thilo. Thank you so much. Guys, we're hearing about Amazon as a Spotify capital markets, right? But the reality is that you guys are highlighting a number of challenges that today capital markets are facing. We are all facing transparency, the distribution, etc. Right? So that is a great way to start. So let's now double click on our life cycle, right? What do we see today on digital assets? and the life cycle. So we're going to start with issuance. So maybe Victor, I'm gonna call you, and you guys share your thoughts. But you, Victor, you have a lot of experience there. So what do you think?
So I will start. I will take the example of several persona or type of target segment. So issuers, you can have banks, you can have custodian, you can have maybe asset managers, you can have SME, for example. And I'm going to start with a simple example because it might be the most tangible for the audience with SME. So I'm a founder of a startup. Why should I tokenize, or why should I issue basically digital token? From a founder journey, you have points in your journey where you say, okay, maybe I have to fundraise, to raise money. So first use case is about primary market issuance. I can fundraise using tokenization amongst and with my community. So basically I have a community of users, and basically I will diversify my shareholder basis by issuing tokens. That would be use case number one. Number two will be secondary market. I want to unlock liquidity because basically maybe it's successful. I have a high market cap and I want to give value to my shares. So I will actually sell on the secondary marketplace. And as basically it was mentioned, with the 24/7 trading, maybe it will be different kind of trading schemes, but that's another reason to issue the secondary market. Otherwise, it also simplify the shareholder registry management because it takes time. You can just transfer the ownership by the token. So you have all those reasons that makes it a good reason for issuing. Then for banks, it's the same kind of process. What are the reasons to do that? It's again cost efficiency, first and foremost. So you need to perform tokenization at scale and issuance at scale. After, we will get to challenges a bit later, but yeah, those are several dimensions to keep in mind, but I think it's very important to really focus on the core business and do it with a good reason once you issue those tokens.
That's great insights. Thank you very much, Victor. Matthias, from your perspective, insights on the issuance part of the life cycle, right?
Yeah, I think we should be clear about we should be clear about what's actually happening currently in Europe, and we see in different jurisdictions that it becomes possible to issue digital securities in decentralized crypto registers, actually. And in Germany, we have that kind of law since 2021. In Italy, we see since 2023, these kinds of representations are actually legally possible. And what it really enables is a peer-to-peer transfer of securities on-chain between participants of these registers. So that plays also into what I think is my vision of DLT. That kind of representation allows then the integration of these securities in these different use cases. And the motivation really, I think, depends on your role in the financial services industry. Let's say an asset manager, for example, they are now thinking about issuing fund units on chain to elaborate or to tap into new client groups, new distribution channels, direct distribution channels, maybe market infrastructure providers. They want to offer a decentralized alternative. A bank might want to enhance their origination business with these kinds of offerings. Yes.
That's great. Thank you. Thank you, Matthias. Thilo, yes, please.
Just to add one. I think when we look at the life cycle of a security, issuance is probably the easiest one. The entire conference is about tokenization, which is basically issuance on chain. So I think we're well beyond that space, and we've issued 200,000 of those, 10 billion worth of securities digitized. It's all there. I think everyone here and many in the audience will share that view. I think the question is the question that we need to ask ourselves or the clients is then, to what end are you using the technology and issuing securities on chain? And there are certain aspects that are relevant for the issuer or his agent himself or herself, right? It is speed of issuance, speed of creation of liquidity, transparency, reduction of risk windows, all of these things. I think the bigger value will arise on the investor side, and has to still arise on the investor side, because post-issuance, you created a token which represents absolutely not much on chain because you can't mobilize it sufficiently, at least in the industry I work in, right? So this is for financial institutions, financial intermediaries, not retail investors. So for that audience, issuing a bond on chain worth 100 million euros and buying that bond locks up capital, locks up balance sheet, and beyond that, it doesn't do much for you yet, okay? And this is what we need to discuss as a next step, you know, life cycle processing and reuse, mobilization, these sorts of things.
That's great. Thank you very much, Thilo. And very interesting, the investor impact or the investor benefits, right? So that's quite interesting. All right, guys, I want to hear from you as well the next stage on the life cycle, which is the trading activity, right? So trading platforms, etc. I'm lucky to have this great experience from many of you guys. So maybe we start with you, Victor, and tell us about how do you see emerging trends and trading, etc.
I think that when it comes to trading, I'm going to give some concrete examples because we are actually really tokenizing some Ether funds. So in terms of asset class, you will have equity, you will have debt, you will have funds, you will have structured products. And then usually real estate will simply be a variation because it will be an SPV incorporated with different vehicle and maybe it will be mostly debt or equity. The first question that usually people ask is first on what kind of trading scheme or liquidity scheme? Are you looking for auction-based trading or continuous trading? What does it mean? Auction-based would be like liquidity events. Probably for illiquid asset class, like this private equity or private debt, it's not worth having 24/7 trading. Maybe just auction-based, like on a monthly basis, on a quarterly, on a yearly basis. That could be something relevant to look at. For funds, it can be different. So every issuer will have different needs. The second usually dimension that we look at is also it's important to find a high-quality issuer. Because from the high-quality issuer, so it's about building the supply and the demand, or the buying and the selling of the order book. And what's important in the end is to find really instruments that will be reassuring for the investors, especially as we are building the market. So what takes time, especially for trading, is really to source those right deals so that you don't hurt the potential trust of the future users. So it's very important to keep this in mind while basically building the pipeline. After, you have other considerations, especially for trading of tokenized securities, which is market making, because you need actually to populate the order book and to have liquid and some depth in the order book. And here again, it's about a new asset class, and usually crypto market makers cannot use it because you might need a regulatory license to deal with securities. So you have some of those dimensions to take into account.
That's great. Thank you very much, Victor. Mainak, from your perspective, any thoughts on trading, on the trading activity?
No, I agree with everything you said, Victor. But going one step further than that, I would like to highlight the cold start problem that we have in trading digital assets. You know, the markets are quite thin, especially when these assets are initially issued. Sometimes, both in crypto as well as in private markets, we see that oftentimes there's more venues than traders that are willing to trade these assets. And in public markets, the approach has been to use market makers, you know, to make both sides of the market. But of course, they're expensive. Often, they're not willing to participate in private markets. And even if they are, specifically on tokenized securities, we've spoken to multiple market makers who have a long list of requirements on the smart contract composition, on limitations on trades. There's trade restrictions, holding periods, things like that, all of which are impediments to market making liquid markets on private securities. And so what we've looked at is having asset managers as alternative sources of liquidity. We've brought relationships with sovereign wealth funds, with pension funds, who are the natural holders of a lot of these assets, like credit, real estate, to step in, to always be permanent liquidity sources for a lot of these private markets. And we believe that that might be a more sustainable market structure, which would eventually bring in liquidity and help mobilize the assets, as you said.
It's a question of accessibility and liquidity. And I think this is where we have a dilemma. You mentioned just the right things, right? We don't have a liquidity problem in bonds or equities. You can trade them super efficiently today on any traditional exchange. Where you have liquidity and accessibility issues is with alternative private markets, these sorts of private equity, private market secured assets, sorry. And that's something that we need to overcome. I don't have a solution for that, but I think this is where the technology will allow us to at least increase that liquidity and accessibility to the less liquid and less accessible asset classes.
That's a great point. I don't know, Matthias, if you have any other thoughts here.
I mean, when we're talking about trading, at least in Europe, we shouldn't forget the pilot regime, which was, maybe some of you don't know, pilot regime basically allows to settle and trade, MTF trade, digital financial instruments. And there are certain exemptions that apply. So for example, in these infrastructures, MiCA regulated e-money token can be used as a settlement asset. Retail investors can directly access the MTF. So, and at the beginning there was a lot of discussions around the pilot regime because there were two major things really that kept market participants from implementing in that regime, because first of all, it is volume restricted, dependent on the asset class, and the second aspect is that it was perceived as a temporary thing, and after 3 years it would need to be re-evaluated whether the regime will be prolonged. And now there was some exchange between ESMA and the Commission, and actually it turned out they are really committed to the indefinitely prolonging basically the DLT pilot regime, because they were really saying that that would only stop with a specific legislative act to stop it, and they don't have any plans or intend to, stop it. And that's why really I think the opportunity opens up to work with the pilot regime, do MTF trading with settlement, and then really the pieces, I think, come together. You have settlement currency, you have MTF trading, you have the representation, on-chain digital representation. Then this can become really efficient also, and maybe the future of capital markets in Europe.
That's great. Thank you very much, Matthias. Guys, let's move to the next one, which is the settlement, the clearing and settlement. And very keen to, maybe we'll start with you, Thilo, and hear from you exactly from your perspective, how do you see that happening?
And whether we actually need it to happen. Because at this conference, at least, at the panels that I joined, I didn't hear once the words atomic settlement. Not once did anyone refer to that as being a super important aspect. And I wonder why that is, whether it is, and I think that's the answer, because people have understood it is just atomic settlement. The question whether you need clearing in between, we'll see. Perhaps over time, if we have massive markets where you have to start netting, those transactions, possibly. But at the moment, I think from a clearing and settlement perspective, what can be evidenced on chain is actually super efficient. Seconds, milliseconds, the process will be conducted. For me, the aspect of what happens afterwards, so the sort of custody and again the mobility aspect is much more important, but perhaps we'll touch on that later. But that atomic settlement process, we're evidencing, all of us here, right? Be it in the ECB trials, on our blockchain platforms, settling, transferring assets from one wallet to another or getting it on-chain, not an issue today.
There you are. We're talking about efficiencies here we are, right? So, Mainak, do you agree with Thilo on the statement of the atomic settlement, and do we really need settlement here on this environment? What do you think?
Yeah, I think certainly in the long term, I would agree. I do have some thoughts on atomic settlement, but coming from my perspective in the US, if we restrict digital assets to private securities, Any kind of securities trading is a very, very highly regulated activity. You know, we have the SEC, we have FINRA, we have guidelines from all of these people. We have tons of entities that are intermediaries in the settlement process. We have everything from transfer agents to good control locations to qualified custodians. They all have to work together to settle securities, be they private or public. And you know, while these intermediaries exist for customer protection, which is obviously very important, and you know, with the march of technology, with the development of technology, the role of these intermediaries has to evolve. Currently, they are very wedded to the old technology, and they need to evolve to become more open and more network-oriented. For example, you know, because of the existence of a lot of these intermediaries in the US, we're seeing a lot of walled garden type of platforms come up, especially for the trading of private securities on the blockchain, which means that you have to sign up for an account on each of these platforms, and you're restricted to trading only with other users of that platform. This leads to fragmentation of liquidity, this leads to low volumes, this leads to all of the issues that we're seeing in private markets today. What we think, that's pretty much the antithesis of blockchain and crypto, and very much even unlike the public markets here, which are forced to be interoperable by law. We think that the alternative is an open ecosystem where it operates very similar to how a brokerage account exists today, where you put in your order at your normal brokerage that you've had relationships with over years. That brokerage routes the order to whichever platform gives you the best execution. It gets executed, and then you're able to log in to that account, and you're able to see your tokens. There's no blockchain involved. It's the idea of account abstraction that the crypto world talks about a lot. Now, the actual settlement, I do agree that atomic settlement, DVP settlement, is the ideal. But at least in the US, for example, the actual blocker is the cash leg of the settlement. The banking system doesn't use blockchain yet. And so how do you settle cash in less than the 2 days or the 3 days that it takes for a wire transfer or an ACH transfer to clear is one of our biggest issues. There's talks about stablecoins, CBDCs, all of these are in the future. But eventually, once both legs are on some sort of blockchain, obviously then I think we can talk about DVP. And yeah.
Very good. Thank you very much, Mainak. So, guys, we're touching about the last piece, last but not least, because it's a really critical point. You mentioned, Thilo, right? That this is a very important point on the life cycle of digital assets. So maybe, Victor, we start with you, and then Thilo. Tell us about how do you see, I mean, you know, the difference between, you know, the traditional and, you know, and the new world, right? So what do you see there?
So I think that it's important to start to really dissociate what you call cryptocurrencies from tokenized securities. And the simple difference would be corporate actions and the ability to perform what you call asset servicing, which is really a dedicated business line in most of the banks. Now, from a technologically, how it works, so when it comes to cryptocurrency, Bitcoin, you just have to store. So it's about securing the private key and protecting it in a secure way. Ethereum, you have also the logic of smart contract, where you will be creating or deploying, issuing new tokens, new smart contracts. So here you have the logic of smart contract deployment and smart contract function call. And this is important to keep in mind when it comes to tokenization, because actually those two, the smart contract deployment and the smart contract function call, is all about managing the life cycle of the asset. So that, and this is where basically usually most of the crypto companies were not at all paying attention to, while, and that's why usually you have such a big gap between the crypto world or crypto guys or DeFi versus the traditional finance world. So traditional finance, when you talk custody, you have the notion of asset servicing included. Crypto, when you talk custody in the beginning, you didn't have this. What we built at Taurus is really a fully integrated platform when you have this custody and tokenization integrated, so that you can perform all those asset servicing. So in the case of equity, I don't know, processing dividend payment in an automated way or calling smart contract functions at a discretionary way or level. For debt, it will be processing coupon payments, etc. So that basically the value chain become fully digitized and automated. So that would be one dimension, and for me, it's really the key dimension that will differentiate the two worlds.
It is indeed a key dimension. So, Thilo, from your perspective, thoughts on the custody piece of the Lifecycle?
Perhaps just two thoughts on that I would add to complement. One is risk. If you take the entire life cycle of any asset, of a security asset, the real risk and the claims are raised in the asset servicing space. It's not on the trading side, it's not on the settlement side, it's on you missing a corporate event, you failing on a corporate event at size. So I think that's where everyone, whether it's in the traditional world or in the modern blockchain world, we need to absolutely pay attention that asset servicing is delivered in quality and at the low risk as a counterside of that coin. That's thought number one. The second one is, I hate to be that party pooper, but we absolutely must remember that while we safe keep any asset in a wallet on chain, we need to make sure that there's some level of mobility of that asset. Liquidity is the second aspect, but mobility, that I, as you rightly pointed out, that I can move an asset from one island ecosystem to another island ecosystem, that I create that interoperability, that I create that liquidity that starts developing on the back of that interoperability. That's for me is missing. There's one sentence I love to repeat from someone from a company called the Value Exchange. He said, congratulations, you now have a token and you've just created dead wood. And you've created dead wood precisely because of that point. So custodizing is also important, but we need to think about what do we do next with those assets? Can we lend them out? Can we use them collateral? Whatever other financing transaction, repo or other. And that has not yet, it's starting to develop, but it's not quite there yet. And for me, those two aspects are very important in that last stage of the life cycle of a security.
That's great. Thank you very much, Thilo. So guys, we have been going through the whole thing, right? The issuance, trading, settlement, and the custody piece. And as we were going through, you guys have been sharing many of the benefits of the digital assets space versus traditional. I want to ask each of you to give us the confession of, what is the challenge, right? So if you think about digital assets as a whole, what is the main challenge that you see in your organization, in the industry, on the digital assets space? So maybe we start with you, Matthias.
Yeah, I mean...
And I'm going to ask you maybe 1 minute each, because I have the last question. I want to challenge you with the last question. So 1 minute of the main challenge that you face.
Okay, so maybe you would expect me to say something like technology, regulation, things like that. But I think actually what we see oftentimes with our clients that want to drive internally, the digital asset projects is that they face internal hurdles. For example, maybe that's typical innovators' dilemma. Maybe the market is perceived to be too small. They're working on small innovation budgets. They get maybe blocked by the compliance department. So really, that's the fights they have to fight. And that's why sometimes it takes so long, and maybe sometimes for some market participant it feels a bit slow. But I think in the background, really, a lot of this is already happening.
Market perception, but it's gradually changing, right? On the client side, Okay, very interesting. Thank you, Victor. Main challenge.
I'm gonna put myself in the shoes of a bank, usually, because we are well placed to comment. Usually, when you tokenize an asset or when you want to get into digital securities, technologically you think, so one, there is, which blockchain should I use? Is it a permission blockchain? Is it a public blockchain? So question number one. Then question number two, which kind of smart contract should I use? Is it, you have this template open source, you have another one, so I don't know, ERC 3643, ERC 1400, CMTRT, you have several, but the reality is which one? Question mark. So here, and I will put this, it's, I think the main challenge, you have the regulatory, but you have also the standardization. And once you will have global guidelines instead of just local guidelines or regional guidelines, where people actually might be using the same technology, or no, this is the right thing to use, it will be easier. Our job as a technology provider is to abstract the complexity so that basically the client can focus on the use cases. But this standardization is still creating a lot of friction. Yeah.
It's a great point, Victor. Standardization as the main challenge that we are all facing. Mainak, from your perspective, main challenge.
Yeah. I'll steal a point from you, Matthias. I do think from the US perspective, regulatory uncertainty is something that we still are faced with every day. The current SEC guidelines allow us to settle tokenized securities on the blockchain, but only in parallel with the traditional settlement system. And so, right now there's still a lot of debate about what the best way to do tokenized settlement is. And clarity on that matter, I think, would really set us on a rocket ship trajectory.
Yeah, definitely regulation is a big theme, right? It's a big challenge for all of us, and the US particularly as well.
Yeah.
Thilo, big challenge.
I'll say usability and USP. Usability, because precisely what you just mentioned, we're still talking about the tech, and unfortunately we need to. Do you know what's behind ChatGPT, or do you know what's behind Spotify in terms of tech? No, you don't. And it doesn't matter, because it's usable, it delivers value to you immediately. And that's why usability and USP is important. Usability I've just mentioned on the USP side, at a wholesale institutional grade level, the banks that we speak to still struggle with the USP of DLT. Right? They want to reap the benefits of digitization, efficiency, cost effects, speed, all of these things, but why need to jump into a new tech stack? And that's something that they're struggling with, and the colleague from the Spartan Group mentioned it. We need to take the banks along, and we need to convince them and explain to them why this is also good for them, and that's what we're struggling with. Usability, USP.
That's another great point on the challenge, right? Usability and USP. Excellent. So guys, we have 2 more minutes, and I want to wrap up with something special today for the audience. Tell us a secret. Tell us a secret that we don't know. Tell us a secret of something that is going on in the industry, in your organization, something that we don't know. Come on, we start with you, Matthias.
Yeah, so we are working with a lot of banking clients, and we are working with a lot of banking clients in Germany, and we have a good view on the market there, and it might be perceived that not so much is happening, but my projection is that really we will see all the large German banks to have crypto offerings for either institutional or retail clients in the next 1 to 2 years. They are now building their digital asset infrastructure, the basis to do further use cases, to build tokenization on top, securities on top, and they are building this key management and basic infrastructure now, starting with crypto, where the business case currently is, and then moving on.
That's great. Thank you very much for the secret. A lot of things going on in Germany, right? So, Victor, tell us a secret.
It won't be a secret, it's more a thought. For being in the digital asset space, I think it's like fast is slow and slow is fast. People usually overestimate the speed of change or underestimate it. The digital asset space has always moved in boom and burst cycle, so I think that when it accelerates, and I think it's quite soon, it's always going beyond imagination, and same when you think it's gonna be a revolution, it's becoming slower. So we are at this phase where I believe it might reaccelerate again.
All right, very good. Thank you very much. Mainak, tell us a secret, please.
I don't know if it's so much a secret as kind of a reiteration of our vision, but we're working to make the blockchain ubiquitous so that you don't have to care about your wallet or log in or care about your private keys. You will log in the same way as you have always, and the blockchain will be there to just, in the back end, kind of doing the work for you. It'll be like your smartphone. You won't have to think about it.
Well, that's a good one. Thilo, tell us a secret, please.
Everyone's been talking about DLT and blockchain really taking off, going through the roof in the next 24 months. In 2 years, we'll be there. I think it's not going to take another 15 months. It will not take another 15 months for it to really take off. In the institutional space, we can expect that many more traditional players will be massively, not only investing because they already have, using blockchain technology to tokenize assets, move them on-chain, create business opportunities following the custody point that I've made earlier. So it's not going to take another 24 months. It's not going to even take 18 months.
All right, keep an eye on the traditional business side. Is rocketing now, right? So, guys, we're out of time. Thank you so much for your time. I think these guys deserve a round of applause. Thank you for this fantastic panel, Matthias, Victor, Mainak, and Thilo. Thank you.